The world was jolted awake by news of a joint US-Israeli strike on Iran's South Pars gas field and the Asaluyeh industrial complex. This wasn't just another military operation, it was a direct hit on a linchpin of global energy. Stock markets crashed, commodity prices soared, and panic swept through trading floors from Tokyo to New York. The South Pars field is vital, supplying energy to millions and anchoring global supply chains. Striking it was like severing a major artery of the world economy. Flames rose from the facilities, shipping in the Persian Gulf halted, and governments scrambled for emergency meetings. The attack marked a dramatic escalation, pulling the US directly into the fray and sending shockwaves through the international community. This was no longer a regional conflict. It was a global crisis threatening decades of economic integration. The world braced for the unknown as the first chapter of this crisis was written in fire and fear. The stability we took for granted vanished in an instant. South Pars is the world's largest natural gas field, a critical energy source for Asia, Europe and beyond. The Asaluyeh complex processes and exports this gas, making it the gateway to global markets. An attack here disrupts the entire LNG supply chain, creating a deficit no other producer can quickly fill. The strike was a calculated move to exploit a global vulnerability. Energy prices surged, exposing just how fragile our interconnected world really is. The sleeping giant had been violently disturbed, and the consequences were immediate. Financial markets reacted instantly. Stocks plummeted, trillions were wiped out, and energy prices soared. Brent crude surged, reflecting fears of prolonged disruption and possible escalation in the region. The cost of transportation, manufacturing and electricity shot up, hitting industries and consumers alike. Inflation, already a concern, now threatened to spiral out of control. Amid the chaos, gold shone as the ultimate safe haven, its price climbing rapidly. Investors dumped risky assets seeking refuge from the storm. The surge in gold was a clear sign of lost confidence in the financial system. The world's economic foundations were suddenly in question. In crisis, investors instinctively turned to gold, the crisis commodity. Gold's value endures when confidence in currencies and stocks collapses. Its scarcity and independence from governments make it the ultimate insurance policy. Buying gold is both a financial and emotional act, a hedge against chaos and systemic collapse. Central banks' likely responses, lower rates, more money printing, only add to gold's appeal. As fear spread, the rush into gold became a self-fulfilling prophecy. Traditionally, the US dollar is the world's safe haven, but this time was different. America's direct involvement in the strike made investors wary of holding dollars. Fears of asset freezes and financial retaliation pushed some to seek alternatives. The Swiss franc and Japanese yen gained, while calls for a multipolar currency world grew louder. The dollar faced inflation at home and doubts abroad, testing its unique status. The Federal Reserve was trapped: raise rates and risk recession, or let inflation run. The dollar's dominance was under historic pressure. The global financial landscape was shifting before our eyes. The crisis quickly hit ordinary people. Fuel prices soared, squeezing family budgets. Businesses faced higher costs, passing them on to consumers and fueling inflation. Industries reliant on energy, from manufacturing to agriculture, struggled to cope. Supply chains, already fragile, broke down further, causing shortages and delays. Supermarket shelves emptied, and the cost of living climbed everywhere. Stagflation, high inflation with stagnant growth, became a real threat. Small businesses and rural communities were hit hardest. The distant conflict had become a harsh reality on every high street. The world stood at a crossroads. Escalation risked a global catastrophe. A wider war could close the Strait of Hormuz, triggering an unprecedented energy crisis and deep recession. Economic fragmentation and protectionism could replace decades of globalization. The human cost, unemployment, poverty and unrest would be immense. Yet a path of de-escalation and diplomacy remained possible. Only immediate, unconditional dialogue could avert disaster. Leaders had to prioritize global stability over national pride. The future depended on rebuilding trust and choosing cooperation over conflict.